Ladies and gentlemen, welcome back to the channel. Here in this video, I'm going to break down the data coming out this week. All of your major catalysts. But first thing I will say is tomorrow is the last day of Q2. Tuesday is the start of Q3. Hedge funds and institutions rebalance portfolios on a calendar basis most of the time. For an example, if a hedge fund or institution is they have a 20% maximum allocation to tech, let's call it, and that allocation gets to 25%, well, they rebalance on the last day of a quarter, okay, which is going to be tomorrow. Vice versa, if a hedge fund or institution has a 20% max allocation to staples, industrials, and that goes to 25%, they're going to rebalance at the last day of a quarter. A lot of people thought the last day of Q2 was actually Friday, but it's tomorrow. So I think you could see some heightened volatility in markets around that. Now, I also think that tech could be a big winner coming here this week. And really, I think tech and AI is the place you want to be in markets right now. Now, we did break out to new all-time highs last week. And I think whether or not that continues comes down to some of the catalysts that we're going to have for this week. Keep in mind, it is a shorter week because Friday markets are closed. But nonetheless, I think there's still going to be a lot of volatility associated with this week. So we're going to go ahead and jump straight into it. Hit that like button and subscribe to the channel if you have not done so already. If you guys want to come trade with us live in real time as well, check out that link down below in the description of this video. I send out trade alerts when I make them, but really what we're focused on right now, since this is what could be once in a lifetime AI opportunity. Like the last time you've seen a disruptive, broad technology like AI, or that was as impactful as AI, was the internet. Now, if you were not investing during the internet, once a lot of those companies, started up, you have never seen another opportunity like this before, okay, which is AI. And there's a lot of companies out there that are doing big things in AI that are smaller names that nobody is looking at or talking about. I'm sifting through hours and hours every single day of small cap companies with little to no analyst coverage in the AI space that are doing big things. I've recently invested in 2. They've already started to work, but they're down a lot from all-time highs. Like, these are not companies that are at all-time highs or even close. Okay? And it takes a lot of work. There's 95% of small caps are garbage, but if those 5% can be big winners. And that is what we're doing, trying to narrow the focus down to those companies that are going to be the big winners. And we're doing just that. So come check it out. Link down below in the description of this video. That is the main service that is provided over there. These are not like day trades. These are swing trades. I would call medium term, maybe long-term investments, depending on how they pan out. 6, 12, 18-month kind of time horizons on these stocks. So nonetheless, let's get started with the video. In broader market news today, Trump has again said that Canada should be the 51st US state. And Trump says we have a buyer for TikTok. Trump on Elon Musk said, I think he's a wonderful guy. I know he'll do well. But he does say that Elon Musk's comments were not appropriate. And Trump says we are halting discussions with Canada until it eliminates specific tariffs. Now, let me be honest. Why the markets recovered on Friday, even though they're, the trade talks are being halted with Canada, is the fact of the matter is Canada at this point doesn't matter if we can get trade deals with Europe, Mexico, and China. Okay, one country, unless it's China, is not going to, let's say, make or break the the economy, right? It's not going to make or break the inflation outlook. Again, unless it was China, because so many U.S. businesses do business in China. There's also the USMCA trade deal that is still being honored between Canada, Mexico, and the U.S. And most products fall under that consortium. So there's only selective things that don't, that would be subject to higher tariff rates. Okay, so it's not really that big of a deal to not have a trade deal with Canada, or not have a favorable trade deal with Canada. Now, odds are good that we do get a trade deal with Canada, that Canada drops their VAT tax, their value added tax, some of their, technology taxes, if you will, on U.S. companies. So I think it's really just a matter of time there. And that is why markets bounced on Friday. It's not, as bad as it was before, when we were kind of in limbo with China. Europe trade deals looked far off as well. Now it looks like China trade deal has been signed. Europe should be coming along here soon as well. Now you have Canada that's kind of stalled, right? It's not the same situation it was previously. And I think, again, markets are kind of just over the whole trade stuff anyways, now that the deal with China has apparently been signed days ago. And Trump says, "Ma'am Danny, to receive no funds if elected." This is the guy in New York that is like a super socialist. Trump says we should be at 1 or 2% interest rates. And again, with the Fed that he is going to nominate in early 2026, he's going to share the same view as Trump. And that's going to help get a lot more rate cuts and, again, help fuel this super cycle I believe is coming for AI stocks and for the markets broadly. Like, I think this is one of those opportunities where you really want to lean into it, in my personal opinion. Like, how many opportunities do you get in your lifetime with a brand new technology that is going to revolutionize the world like AI? I mean, the internet was the last instance. Other than that, there's been nothing since the early 2000s, 26 years, almost 26 years, since you had something like this. And I mean, if you went full tilt in the internet, after the bubble got hashed out and all of that, you have done very, very well. And I think that's going to be a similar situation here with AI, hopefully without the bubble part. Trump says Iran probably had 3+1 nuclear sites, so 4. Trump says he would lift Iran sanctions if they can be peaceful. Trump says we have a stupid person at the Federal Reserve. Trump on the tariff deadline, he says, "Don't think I need to extend, but could." Trump says in 2 weeks, we will reveal the purchaser of TikTok. Trump says we have a buyer for TikTok, a group of very wealthy people. Trump says Iran nuclear ambition set back, at least for a period. And Trump says he does not want to pay for 10-year debt at a higher rate. Trump says that China requires Apple and U.S. companies. Trump says that a positive relationship with China is beneficial. I think we can all agree that's true. Trump says China is producing magnets for the United States, and we have a beneficial agreement with China. Also in the news, Trump's tax bill is advancing as undecided senators yield. And let's start with some of your breaking news coming out today and over this weekend. Now, beyond that, we really don't have much in terms of earnings. Just a couple of names you can see here. One that sticks out is Constellation Brands, Tuesday and in after hours, and then Tuesday pre-market you have MSC. But I mean, that's pretty much it. We're going to start getting a lot more earnings over the next couple of weeks as earnings season really starts up again. But there will be no shortage of economic data. So coming out tomorrow, you are going to get some Fed speakers like Fed Bostic at 9 o'clock in the morning, Fed Goolsbee around noon, and Chicago PMIs and Dallas Fed manufacturing. That's really your set of catalysts coming tomorrow. Now, on Tuesday, you're going to get Fed Jerome Powell that speaks at 8:30 in the morning. Now, here's the deal. I think these Fed speakers matter a whole lot less to the markets than they did before because of the calendar, okay? We're now, getting closer to the end of the year than the start of the year, and we're getting closer to having a new Fed chair, okay? A new Jerome Powell. So does it matter if the Fed is hawkish or dovish here when we're going to be getting a new Fed that's going to be in line with Trump that wants to cut rates a lot? Not really. Markets are pricing in 8 to 9 rate cuts between now and the end of 2026, effectively the next, 17 months or so. So that's what Wall Street is really focused on here. While maybe Fed comments move the needle for markets a little bit, I think it's becoming incredibly less or increasingly less important what the Fed says about anything, really. It's just not that important anymore, in my view. And I think over the next month or two, the next 3 months, it'll become more and more obvious that it's just not that important what the Fed is saying. Now, on Tuesday, that's the first day of Q3. So on the first day of Q3, and really even tomorrow, you want to see where is that money positioning? Is that money positioning into tech, into AI? Is it going into defensives? Where are the hot sectors over the next month or two? That'll tell you where hedge funds are positioning and kind of where their mindset is. So you always want to pay attention to the last day of a quarter and the first day of a new quarter, every quarter. Okay, doesn't matter. Q1, Q2, Q3, Q4. And obviously the start of, a new year is pretty important as well. Now, July, historically, over the past 10 years, has been the best month for stocks. You have an average return of over 3% for the month of July. I don't think that's going to be any different this time around, especially since we just hit new all-time highs. New all-time highs tend to lead to more new all-time highs. Unless, something dramatic happens, something we have not faced yet. I think July is going to be a good month. And let's face it, this year has been crazy between trade wars, big tax, bill, geopolitical tensions. It's hard to imagine something that creates more fear than the amount of fear we've already seen. It seems like throughout the rest of this year, things could die down a bit before they ramp up. Okay? It's like going through a traumatic event in your life. And then you have something bad happen that some other people would think is traumatic. You're like, man, I've dealt with this before. It's not the same, right? Kind of same kind of perspective in markets as well. Now on Tuesday, besides just Fed Jerome Powell's speech, you will get ISM manufacturing PMIs and JOLTS job openings. JOLTS job openings are important because imagine it like this. Imagine you are a small business owner, a medium-sized business owner, whatever, and you're looking to hire 5 employees. Great. The next month, you're looking to hire 2 employees. You could make an argument that your business, if you didn't hire anyone, probably slowed down if you're looking to hire less employees. The more job openings, seemingly, the better the economy. Okay, because the more work the economy needs. Now you got to pair that with what do job gains look like, all of that. But that's just kind of a general rule of thumb. More job openings typically is seen as a better economy. So JOLTS job openings for May came in at 7.391 million. You're expecting 7.45 million. Some forecasts are as low as 7.1 million. So you don't want to see a big fall here. A rise is fine, but you just don't want to see a big fall. Now, ISM manufacturing employment expected to rise, construction spending expected to fall, new orders expected to rise, and prices are expected to rise a little bit. So that's the component. You want to see prices come in low and basically everything else come in high. Now you look at the RCM TIPP Economic Optimism Index, expecting that to come in at 49.5. Last month was 49.2. 2. So you are expecting a rise there as well. Now on Wednesday, you will get the ADP employment change. Last month was at 37,000. You're expecting this number to hit as high as 90,000. Now that is the private payroll numbers. Now challenger job cuts for June are expected at 110,000. Last month was 93,816. So expecting a little bit of an improvement from the labor market perspective. That is it. Thursday, the last trading day of this week, you will get non-farm payrolls for June. You're expecting on the low side 100,000, on the higher side about 129,000. Last month was 139,000. So you are expecting a little bit weaker of a report here. The unemployment rate expected to hold steady at 4.2%. Initial jobless claims expected at 239,000. Exports, imports for May, and the balance of trade will feed into a new GDP report in which update from the Atlanta Fed GDP Now tracker. And it looks like GDP is tracking at about 2.9% as of right now. So a really strong number. But again, Q1 was negative 0.5%. So yeah, it doesn't look like we're in a recession. But that Q1 number was, again, really bad. ISM services PMIs are expected to rise as well from 49.9 to 50.3. And that's one the markets tend to pay a lot of attention to. And then again, on Friday, markets are closed. I think it's probably going to be a pretty good week, despite some of the comments we had on Friday. Again, Canada, we're not negotiating any trade deals with them anymore. Again, if Europe comes to a trade deal, if China comes to a trade deal, Mexico's, playing friendly, does it really matter if Canada's playing hardball here? Hard to get? Probably not. As long, we got the trade deal with China, that's what really matters. And most of Canada and Mexico's trade is covered under the USMCA Act anyways. So there's only 20% of trade or so that is not covered under that, which would be affected. So yeah, just my thoughts. I think this week could be a good week, but we really do want to see how investor positioning is for the start of Q3. So ladies and gentlemen, that is going to do it for this video. Hit that like button and subscribe to the channel if you have not done so already. Check out the link down below in the description of this video for the trading community. If you have not done so already, we welcome you with open arms over there. Have a great rest of your day, and I will see you in the next one.